You, yes you, sitting there in your hoodie eating instant noodles, will probably pay more tax this year than the guy who owns Twitter, a spaceship, and possibly half of Mars. How? Why? What kind of cruel cosmic joke is this? Welcome to the U.S. tax system, a magical land where the richer you are, the fewer rules apply, and the more you have to pay. But don't worry, we're not just here to complain. We're going to pull back the curtain, expose the wizard, and explain exactly how this is legal, normal, and totally screwed up. 1. The tax game, and how you're losing. Let's begin with how this twisted game works. You earn a salary, right? You go to work, grind 40 hours a week, maybe even do overtime, and boom, the government takes a chunk of your soul. I mean, paycheck. That's called earned income, and it gets taxed at rates up to 37%, for being a productive citizen. Yay! Now Elon doesn't earn money the way you do. He doesn't sit at a desk answering emails from Karen in HR. No, Elon owns things, stocks, companies, rockets, a literal flamethrower company. His money doesn't come from hourly wages. It comes from assets, which means the IRS says, oh, stocks? You haven't sold them yet? Then we won't tax you yet. Because apparently, making billions in theory doesn't count unless you cash out. Meanwhile, you found $20 in your jeans, and technically you might owe tax on that. In this game, regular people get taxed like vending machines. Insert income, extract taxes. But the ultra-wealthy, they're like secret agents using cheat codes you didn't even know existed. Ew, the rich don't work, they strategize. Let me break it down further. Elon doesn't want a salary. That's for amateurs. Taking a paycheck means you're subject to boring stuff like Social Security tax, Medicare, and Shutter's withholdings. So what does he do? He borrows money against his own stock. Yes, really. Let's say you own $200 billion in Tesla stock. Instead of selling and triggering taxes, you walk into a bank and say, "Hi, I'm Elon. Give me a few $100 million. I'll use my Tesla shares as collateral." And the bank says, "Would you like that in cash or diamond-encrusted briefcases?" Boom, instant tax-free money. Because loans aren't taxable. Why? Because you're expected to pay them back eventually. Spoiler, he probably won't. Meanwhile, you use your credit card to buy gas and suddenly you're $80,000 in debt and somehow still getting taxed. And because these loans don't count as income, Elon can live like a king and legally tell the IRS, "Sorry, I didn't make any money this year," while you got taxed on your birthday money. 3. The capital gains party, and you weren't invited. Let's say Elon does sell some stock eventually. The IRS is finally ready, pitchforks in hand. But wait, it's not regular income. It's called a capital gain, and it gets taxed at just 15% to 20%. That's half of what you pay on your salary. Let's repeat that. You, busting your back, clocking in and out, paying up to 37%. Elon watches numbers go up while sleeping, taxed at a chill 15%. It's like the IRS is giving him a high five for investing while giving you a bill for being alive. Even better, if he waits a year before selling, that's considered a long-term capital gain because holding stocks is apparently an extreme sport now, and the longer you wait, the less you pay. Imagine getting taxed less for doing nothing and more for doing everything. That's the rich person cheat code. They don't just make money, they make it look like they're not making money. Meanwhile, you get a $50 holiday bonus and somehow owe $72 in taxes. What kind of math is this? 4. Tax loopholes, aka billionaire cheat codes. All right, let's talk about billionaire tax loopholes, or as I like to call them, legalized financial wizardry. You see, while you're out here trying to write off your printer ink and wondering if your dog counts as a security expense, billionaires are playing a different game entirely. Loophole 1, real estate depreciation. You'd think owning a $20 million penthouse in New York would be expensive, right? Nope. That place is a business asset that's losing value every year, and so they get to deduct part of it while also living in it. Meanwhile, your apartment leaks when it rains and somehow you owe more. Loophole 2, loss harvesting. Rich people actually celebrate losing money. They sell bad investments at a loss, write it off to lower their taxes, and sometimes just buy the same thing again later, like crashing your car into a wall and getting paid by the government to fix it. Loophole 3, the offshore shuffle. Cayman Islands, Bermuda, Switzerland, places with beautiful beaches and convenient laws that politely ask, taxes? What taxes? Billionaires stash money in these places and say, it's complicated, while your Venmo gets flagged for suspicious activity because you bought pizza at 2 a.m. Loophole for charitable foundations. This one's brilliant. I donated $50 million to a foundation that I also run that pays my family a salary and owns a private jet. It's like giving yourself money, getting a tax break, and then clapping for yourself. Genius. Now try deducting your office chair and see how fast the IRS shows up in riot gear. 5. The IRS isn't auditing Elon. They're auditing you. Here's where it gets almost too real. You'd think the IRS would be laser focused on billionaires, right? Wrong. They're not going after Elon. They're going after you. Yes, you, the person with 3 roommates, a 2009 Corolla, and exactly $37 in savings. Why? Because auditing billionaires takes work. Billionaires have lawyers, accountants, teams of wizards probably. Their tax returns look like algebra textbooks. Yours? W-2 maybe, a 1099, and a passive-aggressive letter from TurboTax. It's easy to audit you. In fact, low-income tax credit are more likely to be audited than multimillionaires. Let that sink in. Elon Musk, I borrowed $600 million tax-free, IRS. Ah, buddy, keep innovating. You, I deducted $300 for home office supplies. IRS, get the battering ram. You're out here showing your receipts. Elon is out here building rocket ships with tax breaks. Fair? No. Efficient? For them, yes. 6. The Billionaire Tax Plan. Avoid, defer, disappear. Let's walk through the 3-step billionaire tax strategy. I call it avoid, defer, disappear. 1. Avoid income. Don't take a salary. Don't make a wage. That's for peasants. Let your stocks do the work, your assets grow, and your yacht appreciate in value. If no income is reported, there's nothing to tax. 2. Defer taxes. Never sell anything, never realize a gain, just borrow against your assets. It's like you owning a PS5, pawning it for cash, and still playing games on it every day. Example, Elon borrows hundreds of millions against his Tesla shares. He never sells them, never pays capital gains, and lives tax-free because loans aren't income. They're just really big IOUs. Meanwhile, you took a student loan for $8,000 in 2012, and you still get reminder emails with crying emojis. 3. Disappear, aka die strategically. The final move, the step-up basis. Let's say Elon dies and leaves his $200 billion in stocks to his kids. Normally, you'd think, whoa, the IRS is about to throw a party. But nope, the value resets to whatever the stock is worth the day he dies, which means no tax owed on all those decades of unrealized gains. He dies, and instead of being taxed, his wealth is reborn, untouched, pure, angelic. Meanwhile, you leave behind your iPhone 6 and a half-used Amazon gift card. 7. Don't hate the player. Learn the game. Okay, take a breath. We've laughed, we've cried, we've been audited emotionally, but let's be real. This isn't about jealousy, it's about awareness. The system is complex on purpose, but it's not entirely off limits to you. No, you don't need to be a billionaire, but you can stop playing the game blindfolded. Here's how to start. Learn how investments are taxed differently than salaries. Set up an LLC and deduct real business expenses legally. Invest in assets, not just sneakers and subscriptions. Understand that being rich is less about income and more about structure. You're not bad with money, you're just playing a game you were never taught the rules to. So don't hate Elon, study him, then beat the system at its own game, one deduction at a time. So yes, you, with your microwaved leftovers and cracked iPhone screen, will probably pay more tax this year than Elon Musk. But now, you know why? Like this video before the IRS figures out how to tax your YouTube click. Subscribe for more painfully funny financial truths. And drop a comment. What's the most ridiculous thing you ever got taxed on?